Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio. Well, to continue the housing conversation, I want to bring in my next guest, Ravi Kantha. He is with the Sarahan team. He's a principal and founder at Kantha team, and he joins me now with more, especially as we talk about, does it make more sense, Ravi, to own or rent in this environment? What would you say?
You know, it's interesting. People ask that question all the time, and it really depends on personal circumstances to some large extent, but my advice to clients is usually, are you going to live in this place for more than 5 to 7 years? Because when you look at most markets, the closing cost of entering and exiting a property, buying and selling, if you're doing it within a 2 to 4 year span, it's basically it's a gamble, right? You're hoping the market makes up for the 6, 7, 8% of closing costs that you're going to incur on the way in and out, and it's going to be higher in luxury markets and in urban markets. So I tell people, you're going to live there longer, you should buy, unquestionably. Especially in high-end markets, New York, LA, Miami, right? Those markets perpetually over a 5 to 7 year track typically will move north. Obviously, if you decide to sell in the middle of a downturn, that's not the case. But rental demand is always high. There's a nationwide shortage in housing, and I think if you're paying sky high rents, yeah, look, mortgage rates are a little higher right now, but it's still worthwhile. There's that corny saying in real estate, marry the house, date the rate, right? You can refinance a property. You can't turn back the clock and lower the rent that you initially paid, which kind of set the barometer for where your rent was going over the years.
I want to learn more about your clientele, which areas you service, and what you're seeing among those potential buyers right now.
Sure. We specialize in luxury real estate in New York City. So we do a lot of work in prime Manhattan, Brownstone, Brooklyn. Our clientele comes from all across the world, frankly. We sell everything, full-time residences, pied-à-terre to ultra-high net worth all over the world. And that market never stops, right? We have downturns, and I'd say the last 2 years are probably the slowest 2 years on a volume basis in New York City that I've seen in my career. And that is destined to change. Most New York City downturns, most real estate downturns don't last for 2 years. That's a long time for volume to be low. Mortgage rates really threw a wrench in everything, right? We had this explosion of demand during the latter half of COVID, and then mortgage rates were really low. It just led to this inescapable urge for most people to do something, right? Rates are low, demand, the market is flying. Let's get out there and buy something. And a lot of people did. And then when rates started coming up, it slowed down. And then last year, you saw January, February, it felt like it was going to get busier, and then the Fed comes out and says they're kind of halting, they're not going to lower rates, and everybody just pumped the brakes. And it's obviously there's no direct correlation, right, between the Fed and mortgage rates, but they are connected, and people look at the Fed's decisions as a barometer of where things are going. How confident are they in the economy?
What does a red sweep in Washington mean for your business and your industry?
Well, I mean, look, the initial response from the market has been super positive, right? Stock market is flying since the election. I think people are generally anticipating that the Trump tax cuts become permanent in some way, form, or fashion, right? They may not be exactly what they were, but something is going to happen, and it's probably going to happen pretty quickly. So those are generally taken as positives, right? But I think the negatives and the uncertainty is, what does the economic policy for the new administration mean for inflation and for the economy long term, right? So I think there are concerns about inflation. Tariffs is the buzzword, but I think it also just has to do with, are we reducing spending? Are we increasing spending? And that's what Wall Street seems to be looking at, and that is a big driver for our market. My clientele, a lot of financial services professionals, and they're all sort of cautiously optimistic right now about what 25 looks like. When I look at it, I see, there's if you talk to any loan officer today, they'll tell you the historical averages for mortgages have always been much higher, so this shouldn't be, this isn't that high historically. But everybody has a short-term memory, right? People remember 3% mortgages, so it's in their head that a 6.5 or a 7, that's a lot, and it's expensive, and I should wait. At some point, that psychology has to change, because we're not heading back to 3% anytime soon, and it's just a question of, what is that standard that people say, you know what, I'm just getting back in the market. The stock market is good. My earnings are good. I need to get back out there and buy a house.
So let me ask you this. With a stock market that is at record highs and doing very well since this presidential election, how should a viewer look at perhaps investing in a property, in real estate, versus investing in stocks?
Well, look, it's a good question for a financial advisor, but as a real estate broker, I will tell you, I see no downside to investing in real estate ever. And if you want to have a well-balanced portfolio, it's definitely part of that whole equation. But from a personal standpoint too, is it your home? Is it rental real estate? How are you looking at it? There is definitely no downside to investing right now. Prices are not going to go down from where they are now, right? We've had 2 low years on volume. There is no way that the market says, okay, like we'll have a price correction now. It would have happened already.
Yeah.
So I don't think we're going to see that, and I think it's a good decision for people to get in the market.
So I think the answer is both, right?
Yeah.
Both are good investments.
Both are good investments. It's actually one of the biggest struggles we have in the luxury sector, when the stock market is doing really well, people don't want to pull their money out of it. So it's one of the struggles is, we have high rates, we have a good market, so there's a tug of war between real estate and the stock market, right? It's like, why would I pull my money when the market's doing so well? But at the same time, when you have inflation concerns, real estate is traditionally a really good place to be.
Ravi, so good to get your take. That's Ravi Kantha. He's a principal of the Kantha team at Serhant. Ravi, thank you.
Thank you. Appreciate it.